Welcome to our panelists here today. So maybe we kick things off like we did last time and just go over a little bit of our panelists here today, kind of the companies that we're representing, and maybe we can add a little caveat to it and understand how you first got involved in the crypto and blockchain space. So please, maybe, would you like to start?
Is it on already? Yeah, very good. Yeah, thanks. My name is Roger. I'm the head of DLT Finance. We are a broker-dealer and a regulated custodian for crypto assets for institutionals like banks, asset managers. And before I was 20 years at Deutsche Bank in a derivative trading part, so I know both parts, so the traditional world and for now the new world of digital assets.
Hi everybody, my name is Florian. I'm a regulatory lawyer at Linklaters. We are a full-service global law firm. And I'm also the head of FinTech Germany, and I got involved, I think, 2016 with DLT during a secondment in London, where we were working on an AIDS research project, which was financed via DLT tokens.
Yeah, so I'm Tim at Fireblocks. I've been on several panels before, but I do work for Fireblocks. We provide digital asset infrastructure to major financial institution, crypto-native companies. Similar background as Roger. I worked in trading, was the head of trading for PIMCO and parts of DWS, based in Germany and Asia, and got down the rabbit hole some time ago.
And my name is Konstantin. I'm co-founder of Kadea. Kadea is a digital debt capital markets platform focusing on various asset types. And yeah, we are pretty new to the scene, to be honest. We just started the business in 2019, secured seed funding in 2021, and now just launched the world's first fully blockchain-based securitization transaction together with Bank Frick from Liechtenstein at the end of 2021.
Hi, I'm Thomas from Blocksize Capital. Blocksize Capital is providing a professional infrastructure for crypto trading for banks, asset managers, funds, and so on. I have a background in banking and consulting was also the time when I first got in contact with the crypto and digital assets scene, where we had first consulting projects on how banks could communicate against their clients towards questions they reach. We had some kinds of workshop series there, and that got my interest to go deeper into this, so I changed to Blocksize Capital 2 years ago.
Oh, fantastic. We have a lot of, let's say, the traditional world coming together and joining the Web3 space here. I mean, so let's maybe start from that side and understand from panelists here today how receptive the TradFi, the traditional financial world, has been to digital assets and building that infrastructure. I mean, maybe you'd like to kick us off.
Yeah, I think in general, the problem is if you come from a traditional banking side, you have an infrastructure which had been established over, I don't know, 20, 50 years. And once you have a new asset class, there are pretty much everything is new. Yeah. So as an example, I was a trader for equity. So if you buy a stock, you have one share. You have for pricing, you have 2 digits after the separator. If you buy a Bitcoin or any kind of crypto assets, you can buy fractions of it. And you can book it with 8 decimals after the separator. So existing infrastructure for a core banking system doesn't know that you can have 8 digits after the separator. So you need to explain the old software that there will be coming something new, and this kind of implementation is only one part of it.
Yeah, fantastic. Yeah, would I put my Satoshis in the bank account?
Yeah, and you cannot cut it off, yeah, but then something is missing at the end.
Yeah, you can't round everything up. Fantastic. Any other examples of like the implementation of digital assets into infrastructure that our panelists here have today?
Yes, so I mean, what we see on our side is obviously lots of crypto-native companies that build businesses on the base of digital assets. So that's basically the battleground. But then there's also lots of traditional financial companies, mostly intermediaries, right? They always position themselves at the intersection whenever there is going to be significant flow, right, and buying, selling of crypto. Another really interesting use case is anything around affluent customer groups, mobile-first customers. Think about the super trading apps out there that do think crypto is another asset class next to buying, selling equities and anything else. So clearly, there's huge adoption there, definitely.
Fantastic.
And I think just one observation I would like to share. I think we're always very, very quick to say, well, the big banks and the big institutions, they're very slow and everything. That might be true to a certain degree. But on the other hand, I think right from the beginning, there were always parts of those institutions that got involved. There were pilots, and people got excited about that and got funding to drive that in an R&I kind of style. So I don't think it's fair to say, well, they're always lagging behind, but they're just very big, and parts of them got involved quite early. So I think the interest always has been there, but maybe not as visible as with the digital natives.
Yeah, maybe I totally agree. What we clearly see is a rising interest in all those digital asset and cryptocurrency topics coming from the traditional finance side. And then, of course, the first question would be how to handle this, how to get really access to that world of a kind of new asset class. You can go, I mean, different ways. The easiest one would be probably to have like ETPs, ETNs, which you could book into the existing infrastructure. But if you would like to have a direct exposure in crypto assets, then it comes to the next question, how to integrate such a new infrastructure, which handles the topics like you mentioned of decimals after the comma, and also a 24/7 ability to trade and other things, which is quite interesting, and this is what we then discuss and find solutions for.
But I think what we all can agree upon is that institutional interest is mainly driven by customer demand. And so, in my opinion, at least also from our experience, interest in crypto or natively digital assets is very high amongst institutional investors or institutional players. But what we face right now, when we start, talking to institutionals about, shifting some of their securities tranches to blockchain, they are pretty reluctant, and it costs a lot of energy to get them convinced that this might be a good option, even though cost savings might be high, but they are still very cautious with regards to regulation. There is still a lot of regulatory uncertainty, and they need someone who's backing them from the management. And those guys often look on the numbers and customer demand. And right now, there's not that much demand for digital securities, at least for the moment. And I think that's a hurdle that we always have to tackle.
Yeah, fantastic. And I'd like to let's say pose maybe a little bit more, let's say a challenging question there in terms of the importance of infrastructure in the digital asset space. We see a lot of, let's say, decentralized exchanges that are able to operate, let's say, themselves, and let's say blockchain inherently could kind of, let's say, operate itself as well. So where do you see the importance of infrastructure providing to, let's say, consumers, as you mentioned, and we were discussing a little bit about, let's say, not your keys, not your crypto. Maybe you can provide a little bit of context. Maybe we can start here from the Fireblocks perspective as a custodian, like the importance of infrastructure.
Yeah, so I mean, look, the technology needs to be obviously fit for purpose, right? And if you operate in a highly regulated environment, a business that has been running for a long time in traditional financial services, with all the checks and balances and controls in place, I don't think there's anything you can do to sacrifice that for, say, another asset class called digital assets or crypto, right? So kind of it's sort of the minimum entry requirement, and checks and balances around security, around who has access, who has controls over specific actions performed on the blockchain are absolutely needed, right? And no one will sacrifice that for just moving into another asset class, certainly not.
Thank you. Any other importances related to the infrastructure today?
Yeah, I think it's quite an interesting point because on the other hand side, if you have, for example, CSDs like Clearstream, finally nobody knows for sure that there's still a piece of paper somewhere down in the basement where it's written, "This is my share," but finally everybody believes that it is. And if a new asset class and a new technology steps into the market, you need to gain this kind of trust. And therefore, especially if it comes to really technical questions about custody, storage, it's quite important to build these up and to create these trust in client base and as well in custodians and intermediaries. So, I mean, we are grown up with this technology and everybody knows how to handle a nano ledger or a MetaMask wallet. But finally, if you come to other people not being able to use it, they have missing experience, so they are still looking for these intermediaries. And it doesn't as a on a blockchain, you normally talk about deleting the man in the middle. But finally, everybody who is aware of his Sparbuch, he wants to go to an intermediary. And once he has lost, or somebody has lost his PIN for his ID card, for his credit card, he's happy that he has an intermediary where he can go to. And if you lost your keys, you will never have access for. So that's why I think there's still also room for these kind of technical providers and intermediaries also for the new blockchain.
Yeah, no, exactly. You can't call the Bitcoin service support and be like, hi, I lost my keys now. Can you recover that for me? Okay, fantastic. And so as we see the merge between, let's say, the traditional financial world and this new Web3 digital world, I mean, what are some of we were talking about the uncertainties from a regulatory standpoint, a legal standpoint. What are some of them that now that we understand more, or what are some of the challenges and hurdles we still have to overcome?
I think just a general question in that whole space always is what kind of regulation do we want or do we need for the infrastructure and the products we have and we build? Is it the right way to say, well, we kind of try to fit it under our existing regulation? And I think there are good arguments to do that because the existing regulation addresses proven risks in that market, right? And this is a value for everybody that this is, you know, done right. On the other hand, do I miss certain opportunities, certain innovative features if I press this new asset class, those new opportunities in that existing framework? And we briefly talked about that before that panel. I think here the DLT pilot regime is a very good example how regulation might change going forward, because the pilot regime kind of works on that principle. Well, this is the risk. You need that license, and if you want that pilot regime license, please tell us why the existing regulation doesn't fit for you, and then tell us how you intend to address this risk we want to, to get rid of. And I think thinking in this direction is going to be very, very interesting to see where this is going to take the market. And it probably will make it more complex to a certain degree, having different regimes for products that are not very easily distinguished in certain areas.
So the one thing I would say there is that, like, when you think about change, there's really two things in driving it. That's technology and the change in technology and the application thereof, and then regulatory clarity. And, like, I mean, as Fireblocks, we very much appreciate, like, everything's above the waterline, that regulatory clarity will drive adoption, and we see this clearly with the banks, with the regulated entities. They will not move in the shining light in the absence of regulatory clarity. I think that's extremely clear, right? And again, you can have the best technology in place, but you're not going to adopt this into production if you can't do it from a regulatory basis. So again, this is very important that we get this really right.
I would fully agree. And Florian, we also talked about this earlier. I still don't get why the DLT pilot regime only is catering towards CSDs and exchanges, MTFs, and nothing is including banks or also fintechs, because we would also be interested in joining the sandbox, actually.
But you do have investment firms.
Yeah, okay, but still some important players are missing, especially those fintechs that might drive innovation even further. Yeah. So. I think we still need some lobbying there, and some people really trying to push boundaries even further in that regard.
No, definitely. Inclusion is really important in this space, and maybe we can be inclusive and even include our audience a little bit as well. If anyone does have any questions for our panelists, don't hesitate to raise your hands as well. We'd happily take some from the audience as well. But we can continue a little bit further and talk further about, let's say, the adoption of digital assets with regards to infrastructure. I mean, how do our panelists here see the future development of infrastructure regarding digital assets? What is to come?
So the one thing, again, is like get a clear strategy done first. Like make sure that you understand that it's a journey. It's not about, I'm going to build up a custody technology stack and I might go for Fireblocks and the other services, but it's really a journey. So almost liken this to like a pyramid where you got to build a really solid foundation, and that's kind of the custody you got to build. And then there's all these services that are going to emerge on top of that, but make sure that you can embark on them based on your technology selection. You don't need to re-platform. We had seen this several times already. It's extremely painful. If innovation keeps up the pace as it is, we're going to have products and services in 12, 24 months we're not even aware of today. And all of that needs to be supported.
And maybe one quick thing, which might be strange from a lawyer, but I think the tech side and the regulatory side is just one part of the whole story. I think especially for bigger institutions, one side that gets often overlooked is the cultural side, right? You have to have that certain innovative culture in your company to be able to adopt to those quick innovation cycles, to be able to adopt to those technology and new infrastructure. And that is something that can't be bought, right? That has to be developed and lived and experienced. So I think that's a strong case to get your hands in those assets.
And just to add, I mean, the first step in getting the attention in those institutions is, in my opinion, or from my experience, always a kind of education at the very beginning to have a clear understanding of what we are talking about. What is the different to the traditional infrastructure we have? What is the different in regards to the legal side and the regulatory side? So that is really the base for each and every discussion, and also for onboarding those deciders in those institutions to this new field of asset classes.
No, definitely. It's going once again, going twice. Anybody? No, everyone's also shy in the audience. But maybe a personal one here is we hear a lot about adoption, but are there any tangible use cases that you're working on from an infrastructure perspective to adopt digital assets that you might want to share with the audience, that some cool things that you're working on that, let's say, I know we have lawyers here, so we can keep the, let's say, the confidentiality down, but anything that you would like to kind of disclose or kind of really show to the audience how digital asset infrastructure is being adopted?
Yeah, I think one point maybe we had it over the last year where staking had become famous in the blockchain world. So if you, for example, compare staking of digital assets with the traditional finance world, so you need to have a different understanding because this is something completely new. It's a kind of interest payment, but nevertheless, it's completely different coming out of a technical infrastructure. And also in case of how do you cover it regulatory. And I think there is an adaptation to be seen how this will be also develop over the near future. On the one hand side, you have banks providing their financial services to their client. On the other hand side, you have mostly unregulated exchanges or service providers. But at the end, I think it will be coming up 5 years in the future. There will be a mixture of it. So it doesn't mean necessarily that exchanges will be removed or will be taken over from banks. It will be a change on the one hand side. So exchanges with different regulatory cover will be able to trade or to provide equity, or banks will be able to provide services on blockchain-related trading for their customers.
I mean, yeah, look, custody, get that one right. Buy, sell crypto, Bitcoin, Ethereum, single venue liquidity, like people can just buy and sell against that known entity. Maybe you allow for deposits and withdrawals, but that's like a bit more scarier because suddenly assets can flow in and out. Then you're gonna think about all these customers. You hold these private keys, right? So captive assets, suddenly they're gonna start talking about something called yield and APY. Where's that button? I want to generate 5%. So therefore, I think that's the extension around staking, lending, borrowing. And then there's other services, but there's businesses out there, and like we always go in with a kind of like a business hat on it and think about, like, if you give me 2 million, is that a $50 million business in 3 years or 5 years, right? And that really needs to be driven by the business side. What's the return on investment to embark on a digital assets journey? But there's so many opportunities out there, and you shouldn't stop by just saying, okay, I fix for the custody and that's it.
I see a lot of opportunities out there, even opportunities for our audience to ask questions, but maybe they won't take us up on that one. So we do have only 2 minutes remaining. Maybe does anyone have any closing words for us here today?
I just would like to add to Roger's comment that I also see this kind of convergence between banks and exchanges. Exchanges, just like Börse Stuttgart, for instance, they started their own custody business. And at the same time, banks or novel banks, digital banks like Sygnum, they started with their own marketplace. Banks are offering lending as well, which is usually a banking business, even though it might not be regulated. But yeah, so we really see a convergence there. And yeah, I'm really looking forward to see where this goes.
Fantastic. That overlap between the traditional and the digital world becoming a reality. Fantastic. Thank you so much.
Thank you.